Good morning, everybody. Good morning, all you magnificent melon heads of the world. And happy Tuesday, everybody. Today is March 11th, 2025. The top story this morning, for the moment, the selling seems to have stopped, or at least slowed. Stocks down a little bit today, just barely. They were positive for a little while. They were negative for a little while. So we don't know if this sell-off has run its course or not. But I can tell you, based on some of the earnings and some of the headlines we're seeing this morning, I'm guessing the selling is not over yet. So what makes me say that? We got a couple of different stories going on this morning, and they all seem to be telling us the same thing: the struggling U.S. consumer. And guys, we've heard a lot about the R word, the recession recently, the recession that wasn't the one that's been going on since 2022, but we changed the definition and then defined our way out of it. And then we told everybody it's the best economy ever. What's the matter with you? Can't you tell how good you have it? Well, now things have changed. Journalism is back. We ask questions again, and now we're starting to admit, yeah, the economy was never that good. And we got proof of that this morning. First of all, it is Airline. We got three different airlines reporting different stories today. First of all, American Airlines and Delta Airlines, both reporting big profit warnings. American is actually saying government travel is way down. And I actually saw on Twitter just a few moments ago, United Airlines is saying the same thing. The cutbacks, the DOGE, the government layoffs, all these things are starting to have an effect on airlines. Remember, guys, government spending, although I think generally it's wasteful and inefficient, it is a part of GDP. It is money that's spent into the economy. And so if you're going to cut that, the economy is going to slow. And you can see that in the airlines this morning. We also got an interesting story from Southwest. They're adding new fees. Southwest is in a transition here. They're going from one of the budget airlines, and the budget airlines have all been doing horribly lately. And it looks like Southwest, because of activist investor involvement, they're just determined to become just another airline. And well, shareholders in Southwest are actually loving it this morning. No pun intended. Sorry, I know, ticker LUV. Yeah, I roll. Adding more fees at Southwest. So take all this stuff combined. You got people are cutting back on discretionary travel. You got government workers are flying less. You got new fees are being added to a formerly budget airline. It's a sign of the times going on in airlines. And we got the same thing going on in retail this morning. Two specialty retailers. First of all, Dick's Sporting Goods. Now, Dick's has been kind of like a bright spot in retail for the last couple of years. They actually had a pretty good 2024. They've been one of the stores that's been posting consistently higher comparable sales growth, well above the rate of inflation. Well, it looks like that is no more. Dick's came out, they reported halfway decent earnings, but their guidance was weak, and the stock is paying the price here. And hey, sporting goods, that is your quintessential discretionary item. We're getting something similar from Kohl's, Kohl's has been a dumpster fire for a long time, but then somebody just came along and poured gasoline on it because it's now dumpster firer. I don't know how you would say it. They're guiding for big time negative same store sales at Kohl's. Guys, the consumer, he's cutting back. He's hurt by inflation. We've seen this, right? 90% of consumers are struggling in this economy. You've got 10% are doing really well because they're from upscale families that own lots of assets. And so they have been spending extra money into the economy. Well, that's not going to save a Kohl's. That's not going to save a Dick's Sporting Goods. And so we're starting to feel the pain here. There is that R word. We can't fake it anymore. You can't gaslight people into saying it's the best economy ever. We're finally admitting that the recession that wasn't, the one that started in 2022 and has been going on this whole time, well, it's still here. And thanks to tariffs and thanks to trade wars, it's going to get worse. Now, also, we got another story going on. You may have heard about this yesterday. There was a tanker got hit. There was a collision in the UK. A fuel tanker was hit by a container ship. Now, that fuel tanker was at anchor. What you maybe haven't heard was that tanker ship was carrying fuel for the United States military, aviation fuel. You may have not heard that it is one of 10 such ships that is pre-positioned around the world, holding aviation fuel for the U.S. military just in case they need it. Also, what you maybe have not heard was that 3 days before yesterday, so 4 days ago now, March 7th, there was another collision in Turkey where a Russian tanker, a member of the shadow fleet, the Russian oil tankers that are moving oil around the world despite the sanctions. Well, one of the Suezmax, the great big tankers for the Russian shadow fleet, was at anchor and it got rammed by a container ship. And then 3 days later, an American tanker carrying fuel for the military gets rammed while at anchor. Maybe there's a chance that these two stories are not related to one another, that one is not retaliation for the other. In my opinion, that chance is very slim. So what is it? Do we we don't fight, right? Thank God we don't fight. We don't actually shoot at each other, but we just have merchant mariners ramming each other at sea. Is this how we compete now? Is this what we do? Or are we doing this like pseudo naval combat where everybody's just like ramming speed commercial ships? We don't put guns on them, and so we're not really at war. Is this what we do now? I don't know, but we're going to talk about those two stories too, because you are not hearing about that in the press. You heard about the one in the UK, but I just accidentally stumbled upon the story yesterday about the one in Turkey from a few days ago. And I think it's pretty obvious that this story in the UK yesterday, I mean, I saw the marine traffic data. This thing did not slow down. 16 knots, sailed right into it without veering at the last minute or anything. It was clearly intentional, if not just a guy. Maybe the entire bridge crew was asleep. I suppose that's possible. But in my opinion, it was clearly retaliation for the event in Turkey. And we've got a new tariff story this morning. This is interesting. A new one coming out of Canada. They're putting tariffs on electricity being sold across the border, but there's one unique thing about this tariff story that stands out from all the other ones. Stick around until the end. We'll talk about that one. But first, we must shrink my big melon of a head, and let's check in with what is going on in the indexes. Don't forget that like button and that subscribe button, guys, because we do this one every day. So come on back tomorrow and have your coffee with the melon heads. And right now, it looks like the S&P is pretty much flat here. We're down 2 points. All right. Could be a lot worse, right? After yesterday, let's call this the W that it is. All right. We're down 3 points, 0.06%. Basically, no movement in the S&P. The Dow, a little bit negative here. We're off by 40 points or 0.1% to the downside in the Dow. And the NASDAQ is off by 10 points or 0.05%. Stocks are pretty much flat here, trying to make up their mind on where they're going to go. Now, the DXY, meanwhile, we have a sharply weaker dollar once again this morning, 103.47. That's off by 46 basis points. So what is going on with the dollar? Why is it so much weaker here? I think it is pretty clear that it is the euro continuing to strengthen. This is looking at daily candles of USD EUR, the number of euros it takes to make $1. And you can see up here, guys, we've talked about this. This was when Trump and Zelensky had their little spat in the Oval Office. And ever since, the euro has strengthened like crazy. We've talked about this a lot in the last couple of days, the last week and a half. Europe has to defend themselves now. They are going to borrow a ton of money in order to build up their own military instead of just relying on the United States. That means there's going to be bigger demand for euros. That means higher interest rates and a stronger euro versus the dollar. And, while they're at it, they're adding things like infrastructure to these bills that are supposed to be defense packages. So it's going to end up just being a total spending bender in Europe. And that is why the euro is strengthening. That is what's putting pressure on the dollar this morning, because you can see here the euro this morning, we got another big red candle strengthening versus the dollar. Now, the yen has been another contributor recently. This is USD JPY now. This is the number of yen to make a dollar. Now, this has been contributing to the weaker dollar pretty much since the middle of January. You can see this trend here. That is not contributing to the weaker dollar this morning, though. If we zoom in a little bit, you can see we got a green candle here. The yen has actually weakened against the dollar a little bit here. Emphasis a little bit. We're pretty much right back where we were a day ago. And I would also add, guys, that where we're at right now, we're pretty much where we were at on August 2nd. I talked about this one yesterday, right in the middle of that panic over the unwind of the yen carry trade. Be careful of the yen here. Watch what's going on in Japan. Any further strengthening in the yen could reignite that panic from August. And you remember that was not exactly a good day, August 5th, 2024. Also going on this morning, looking over at the bond market, a little bit of a mixed bag. We've got higher yields on the long end, lower yields on the short end. The 30-year is at 4.559. That's higher by 2 basis points. The 10-year, 4.227. That's higher by about 1.5 points. The 2-year is up by almost a point here at 3.904. And meanwhile, the 1 month is a little bit lower, about 0.5 point to the downside at 4.305. So not a lot of movement happening in bonds this morning. Commodities, it looks like a pretty good day for metals so far. We've got spot gold is higher by about $21.65 here, trading at $2,910, almost $2,911. That's up by about 0.75%. Spot silver, meanwhile, $32.50, higher by 41 cents or 1.25% higher this morning. I like the shiny. Copper is up by 1.6%. Platinum is up 1.5%. Palladium is up about 0.1% here. And even oil's a little bit higher this morning, $66.86 after selling off yesterday. That's up by about 83 cents or 1.25%. So we've got generally stronger commodities here. That weaker dollar is contributing to that. We have also got Bitcoin is getting a little bit of a bounce after a brutal day for Bitcoin yesterday. We went as low overnight as $76,555. We're now back above 80, just barely, as shown on Coinbase here, $80,803. Watch that 200-day moving average. We are below that. I don't think we are quite out of the woods for Bitcoin here, guys. As long as this market is deleveraging, Bitcoin remains at risk. All right, let's talk about some of these airline stories here, guys. Here's the first one. This one hit late last night. Delta slashes its profit forecast on weakening travel demand. Weakening demand, that is a U.S. consumer story. Delta Airlines cut its profit expectations for the first quarter roughly by half on weakening travel demand, the latest sign that economic worries are pressuring consumer spending. Earnings will be 30 to 50 cents a share in the period. That's down from an earlier forecast of as much as $1, the carrier said Monday in a statement. Delta also lowered its guidance for revenue growth to reflect a $500 million reduction and for operating margin. The diminished outlook marks a sharp reversal from the start of the year when Delta CEO Ed Bastian trumpeted a steady demand environment. The carrier on Monday cited economic volatility and concerns over flight safety that have weighed on the U.S. industry in recent weeks. Look, there's been a lot of, we'll say, heightened visibility around aviation accidents. You could go all the way back to last year with all the Boeing fiascos. And then, of course, that plane collision in D.C., that was a big factor. I've got a lot of people, every time there's some kind of an aviation accident these days, I get an email from people. Look, the aviation accidents aren't actually up. If you look at the statistics, they're pretty much flat year over year. That event in D.C. notwithstanding, that was the worst aviation disaster on U.S. soil in quite a while. But there's really no noticeable tick up in the trend, but there is definitely heightened visibility about it, and it appears to be having an effect on people's travel plans. And Delta is cutting their profit because of it. That stock is down about 2% ahead of the opening bell, trading at $49.32 here. That's off by about $1. Meanwhile, American is having pretty much the same problem. American Air cuts earnings outlook on DC accident and soft demand. Now, the DC accident, that was an American Airlines flight, so they're actually taking a direct hit, not just the secondary effects of people flying less because of the fallout of the accident, but the actual accident itself. American Airlines said it will have a larger first quarter loss than expected as it grapples with weak leisure travel demand and fallout from a fatal collision involving one of its planes in Washington. The carrier now anticipates a loss of 60 to 80 cents a share in the 3 months ended March 31st, according to a statement on Tuesday. That compares with its prior outlook for a deficit of 40 cents a share and analysts' expectations for a 28-cent loss. American joins rivals Delta Airlines and Southwest in trimming financial guidance this week on growing concerns over a demand environment that has been looking strong coming into 2025. Now, I would just add there's also things here that talking about a series of aviation accidents on January 29th, including that collision and a crash landing in Toronto a few weeks later. Now, they're also talking here about actions by the Trump administration, including federal job cuts and the threat of tariffs that could rattle the economy, are leading some Americans to reconsider discretionary spending like travel. So I don't know if this is maybe government employees who are taking fewer vacations or maybe government employees that are going on less business travel, like the government isn't flying them around because of budget cuts. But either way, American Airlines, the stock's actually holding up all right here. It's up 0.4% this morning at $12.56. So despite a big profit warning of a big loss, I should say, American is actually hanging on here. Now, meanwhile, Southwest is also making news. They'll charge to check bags for the first time and launch basic economy tickets. Guys, Southwest Airlines will be unrecognizable from its former self very soon, thanks to a lot of activist investor pressure to change the way they do business. It's happening. Southwest Airlines will start charging passengers to check bags for the first time. It's a stunning reversal that shows the low-cost pioneer is willing to part with a customer perk executives had said set it apart from its rivals. In more than half a century of flying in hopes of increasing revenue, Southwest changes come after months of pressure from activist investor Elliott Management. The firm took a stake in the airline last year and won 5 board seats as it pushed for quick changes at the company, which held on for decades until now to perks like free check bags, changeable tickets, and open seating. So that is all going away as well. And sadly, that's very good for the stock, which means you're probably going to see more airlines start taking away perks. Southwest shares are up 10.5% on this news of check baggage fees, $31.16. That's higher by almost $3 this morning for Southwest. Shifting gears a little bit from airlines to retail, we got this one in Bloomberg this morning. Dick's Sporting gives downbeat outlook even as sales beat. This was a pretty good quarter from Dick's, but it's that weak outlook that is hurting the stock this morning. Dick's Sporting Goods issued a disappointing outlook for this fiscal year, even as it reported sales and profit that surpassed analysts' expectations. The Coraopolis, Pennsylvania-based retailer said earnings per share could be as low as $13.80 for the upcoming year. That is short of Wall Street's estimate of $14.23. It expects comparable store sales, a key retail metric, to between just 1% and 3% in 2025. That's less than the rate of inflation, I might add. Analysts surveyed by Bloomberg had projected a 2.57% rise. So 1% to 3%, the midpoint of that is well below that 2.57% that analysts were expecting. Dick's Sporting Goods is down 1.4% this morning, trading at $208. That's off by about $3. Now, all things considered, Dick's is holding up pretty well here. But keep in mind, guys, over the last year, Dick's is up 16.5%. In a struggling consumer environment, this one has been a rare silver lining, not so much this morning. And then, of course, we have got Kohl's. As I said in the opening, this thing is a dumpster fire, and somebody just poured some gas on it. Kohl's adds to weakening retail sales outlook, and the stock plummets. The retailer sees comparable sales down as much as 6% this year. Kohl's stock plunged 19% in early trading as the retailer's turnaround struggles to gain traction. Comparable sales this year will drop as much as 6%, the retailer said on Tuesday. Analysts projected a decline of 0.5% on average. Guys, 6% decline in same-store sales. I mean, you can just add 3% inflation on top of that. That's 9% less stuff selling at Kohl's. This store is in big trouble here. The company, which had already seen its shares fall 14% this year, had been making sweeping changes in an attempt to get back on track after 3 years of declining sales. Kohl's recruited Ashley Buchanan from Michaels to become chief executive officer beginning in January. The retailer is also cutting 10% of roles at its corporate office, and the retailer said it had identified key areas of focus, including regaining traction in categories such as fine jewelry, and is taking action this year to reposition Kohl's. But Kohl's is the latest U.S. retailer to disappoint investors with a weak outlook. The softness has spanned from Walmart to Abercrombie and Fitch. This is a pretty across-the-board decline in consumer names here. Now, Kohl's is doing a little bit better. I mean, at one point, it was down almost 20%. Now it's down 12.6% here. Still double-digit decline, not good for Kohl's, $10.52. That's off by about $1.53 this morning. And if you zoom out, guys, over the last year, this stock is already down 55.8%. It has just been a rough go for Kohl's here. All right, now let's talk about what happened in the UK yesterday, guys. Keep an eye on this one. This is in Military Times. Cargo ship hits tanker carrying jet fuel for the U.S. military. This one happened yesterday morning. A cargo ship hit a tanker carrying jet fuel for the U.S. military off of eastern England on Monday, setting both vessels ablaze and sending fuel pouring into the North Sea. All 37 crew members aboard the vessels were safe and accounted for, with one hospitalized. Local lawmaker Graham Stewart said the collision triggered a vessel rescue operation by lifeboats, Coast Guard aircraft, and commercial vessels. Stewart said he was concerned about the potential ecological impact of the spill, whose cause was being investigated by the Marine Accident Investigation Branch. The U.S.-flagged chemical and oil products tanker MV Stena Immaculate was at anchor near the port of Grimsby on Monday after sailing from Greece, according to ship tracking site Vessel Finder. The Portugal-flagged container ship So Long was sailing from Grangemouth to Scotland to Rotterdam in the Netherlands when it struck the side of the tanker. U.S.-based maritime management firm Crowley, which operates the Stena Immaculate, said the tanker sustained a ruptured cargo tank containing Jet A1 fuel when the container ship struck it, triggering a fire and multiple explosions on board, with fuel released into the sea. But all 23 mariners on the tanker were safe and accounted for. The Stena Immaculate was operating as part of the U.S. government's Tanker Security Program, a group of commercial vessels that can be contracted to carry fuel for the military when needed. Now, I remember hearing this story with Mish yesterday morning. We were keeping an eye on it. We were wondering, hey, this kind of looked deliberate, but there wasn't any evidence of it. And then we saw, oh, this thing was carrying jet fuel for the military. That adds a whole layer to this thing. And while we were reading about this story, we came across this one from a few days ago. This is in Marine Monster, a sanctioned Suezmax tanker holed in a collision with a tanker ship. Now, this story sounds like, oh, I don't know, exactly the same story. You might be forgiven because this is virtually identical to what just happened, but it is not the same story. This is from a few days ago. A U.S.-sanctioned Suezmax tanker has suffered a hull breach in a collision involving a feeder box ship in Turkey. Marine traffic reported the incident took place on March 7th, while the 150,000 dry weight Mia, built in 1993, was at anchor in the Ambarli area. Now, this sanctioned Suezmax tanker, the word you're not seeing here is Russian, but this was a Russian ship. This was a member of Russia's shadow fleet that is carrying oil in violation of sanctions, and it was sitting there at anchor, and a container ship rammed into them. And then 3 days later, a tanker that carries aviation fuel for the United States military is sitting at anchor, and a container ship rammed into them. Are you seeing how these stories rhyme? 3 days apart. You know what? 3 days is just enough time for a bunch of government officials to get together and figure what is a proportional response and retaliation. I don't know if these two stories are related, but I'm having a hard time believing they aren't related. And I just really hope this isn't the case. We've already got commercial ships are dragging anchors around, breaking cables and pipelines all over the world. Are we ramming each other now too? I mean, is this like we're too afraid to actually fight, so we're just going to have a bunch of commercial sailors who are just guys trying to make a living? They're going to have to do the fighting for us. Is that what we do now? I don't know. But I really hope this is not a new pattern emerging. And last but not least, we got a tariff story. And this one jumped out at me as well. Ontario imposes 25% surcharge on electricity exports to the U.S. Now, the reason why this stuck out at me, this may seem like just another tariff story, but it's not. Because we're not talking about Canada imposing tariffs here. This is Ontario. This is a provincial government is now imposing tariffs on the United States. So it seems like the low-level politicians, they want to get in on the action, have their 15 minutes of fame, and they want to join in the trade war. Does this mean governors on our side of the line are going to start doing this? I don't know, but the Canadian province of Ontario is imposing a 25% surcharge on electricity exports to New York State, Michigan, and Minnesota to protest against U.S. President Donald Trump's tariffs on Canada, said Premier Doug Ford on Monday, presumably between lines. President Trump's tariffs are a disaster for the U.S. economy. They're making life more expensive for American families and businesses, Ford said in a statement. Yeah, they're also pretty disastrous for Canadian families as well. Maybe we should all get rid of our tariffs. There's an idea. Until the threat of tariffs is gone for good, Ontario won't back down. We'll stand strong, use every tool in our toolkit, and do whatever it takes to protect Ontario. Again, guys, these are provincial governments now, state governments, governors, premiers. All right, this is no longer a national tit for tat. Even the low-level guys are now getting in on it, and that's what kind of stuck out at me with that story. And I just want to say thank you very much to Armando Reyes. I don't know. Either way, that is a regal-sounding name, King Armando of Clan Reyes. Am I saying it right, Reyes? I don't know. Have I been saying it wrong this whole time? M&J is joining in here and saying Reyes. I don't know. If Gigi was here, she would probably come in and she'd turn that Y into a J. She'd say Regis. All right. So I don't know. I don't get out much, Armando, M&J, forgive me. But thank you so much, Armando and M&J, for supporting the channel this morning. I appreciate that very much. You guys are awesome. Thank you for the laugh. Armando is back again, and he says, if my mind serves me correctly, I remember Danielle DiMartino saying that we lost 1 million full-time jobs in 23 and 24. That is factually correct, sir. If you ever look at any of these BLS jobs reports, and I get it, most people never read the reports. Most people just let CNBC read it for them and then tell them what to think. That is how most people operate. We actually open the document, open the attachments, and make up our own minds on this channel. But if you had looked at table A9 of any of those jobs reports over the last few years, it will show you full-time workers versus a month ago in the household survey results. And sure enough, we have lost more than 1 million full-time workers in the last 2 years. Abso-freaking-lutely. We have gained hundreds of thousands, maybe even 1 million part-time work. And we have gained a lot of people working multiple jobs and a lot of people doing gig work. That is not prosperity. I've been pounding the table on this, Armando, for months, for well over a year now. And I've been pointing to these attachments, these tables and the jobs reports that say, look, guys, we're losing full-time jobs. Those are jobs with benefits and vacation time and retirement plans. And we're replacing it with part-time work, multiple part-time jobs, or Uber driving. That is not a sign of prosperity. And that's why we're getting headlines like American Airlines cutting their profit forecast and Kohl's being a dumpster diver, because people working 2 part-time jobs to make up for losing a full-time job don't go on vacation and they don't buy new clothes. They just don't. They're struggling making ends meet. That is why it is the recession that wasn't the one that began in 2022. Thank you very much, Armando Reyes, for supporting the channel once again, sir. I appreciate that very much. And Charles G says, because private equity is in Southwest, they will file for bankruptcy in 5 years. They just destroy for profits. And maybe we're talking about a little bit of like sale leaseback with the planes or something. Who knows? Like, let's get creative here. Look, private equity, generally speaking, when private equity takes a stake in anything that involves real estate, like hospitals or restaurants, it means it's time to get out of Dodge. They're gonna do a sale leaseback, pay themselves a great big dividend, and then run it into the ground. Right now, what Southwest is doing, it sucks for the passengers because Southwest was a really nice airline to fly on. You could pick your own seat. You didn't have to pay for the fee. It was nice. What they're doing is they're squeezing blood from a stone. They're turning Southwest into any other airline. It's actually probably good for the stock. It just sucks for people who like to fly Southwest. That's all. It's just going to be another crappy airline by the time this is all said and done. Thank you very much, Chuck G, for the super chat and for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciated that very much. Thank you guys for the generosity in the super chats. Thank you also to my magnanimous Melonheads on Patreon and YouTube. You guys rock. Thank you to Nashville Pasta Man for sneaking that in the end. You tracking FHA, paying default mortgages. No, I'm not, Pasta Man. First I've heard of that. I am going to have to dig into that one. Thank you very much, sir, for the super chat. Hi, Mom. Hi, Dad. Love you guys. Don't forget that like button and the subscribe button on the way out. And until next time, live small and dream big.